welcome to Biz This Morning right here on Channels Television. Welcome to the midweek trade, and let's get to the top stories that set your agenda now, starting with oil prices. We see a little change today as investors, they're waiting U.S. inventory data while eyeing upcoming meetings there between President Donald Trump and Putin. We see $66.02. This might not hold before the end of today. Just about 0.15% down. WTI lower there, $63.06, 0.17%. And yeah, we did get a projection from the EIA there saying that oil prices could stay below $60 or 65, but we're still seeing that trading range. Both contracts settled lower yesterday. Trump and Putin are due to meet in Alaska on Friday to discuss ending Russia's war in Ukraine that has shaken oil markets since February 2022. Oil investors are in a wait-and-see mode ahead of this meeting. Meanwhile, we'll see Africa's biggest crude refiner, the Dangote Petroleum Refinery, they've announced a reduction in the ex-depot price of premium motor spirits, PMS, commonly called petrol, from 850 to 820 naira per litre. The price cut was disclosed in a statement signed by the Dangote Group's Chief Branding and Communications Officer, Anthony Chiejina. And we see it's a 30 naira reduction from the previous price, which takes effect from yesterday. Meanwhile, the refinery says it plans to commence the phased deployment of 4,000 compressed natural gas CNG powered trucks for fuel distribution across Nigeria, effective August 15th, as part of its push for operational excellence and sustainable energy solutions. And on the production side now, we see Nigeria's crude oil production averaged 1.5 million barrels per day in July 2025, exceeding its Organization of Petroleum Exporting Countries, that's OPEC quota, for the second straight month, according to the group's latest monthly market report there. And we see the report released yesterday also shows that the country's crude output recorded a marginal uptick from 1.505 million barrels per day recorded in June, cementing Nigeria's position as Africa's leading oil producer, well ahead of Algeria, which pumped about 937,000 barrels per day in the same period. According to the oil cartel, the production figures were obtained through direct communication with the Nigerian authorities. And definitely that's a plus, you know, for oil revenue there. Last week, the Nigerian Upstream Petroleum Regulatory Commission, that's the NUPRC, announced that Nigeria's oil production exceeded 1.8 million barrels per day in July. All right, to other stories now. That's the capital market. Nigeria's Fixed Income Securities Exchange, FMDQ Group, they confirmed plans to launch its equities market, placing a direct competition with the NGX. This information was disclosed in a press release summarizing key highlights from the company's 13th annual general meeting. Meanwhile, the FMDQ's outgoing Chief Executive Officer, Mr. Bola Koko, confirmed plans to launch the FMDQ equity market and the unsponsored depository receipts market. The launch will put fixed income and FX exchange against the NGX, which has been the sole equities market exchange for years. Attempts to launch competing exchanges have failed in the past. All right, so some company news now. Fidelity Bank has partnered with the Pan-African Payments and Settlement System, PAPSS, to make cross-border payments between African countries faster, cheaper, and easier. The new service allows customers to send and receive money in local currencies with transactions completed in under 2 minutes. Take a listen.
At the boardroom of Fidelity Bank's headquarters in Lagos, the mood is optimistic, and for good reason. Fidelity Bank has officially partnered with the Pan-African Payment and Settlement System, PAPSS, a centralized infrastructure that allows cross-border transactions in local currencies across Africa. This means no more waiting days for transfers to clear, no more high costs from currency conversions, and no more intermediary banks slowing things down.
It is estimated that Africa loses over $5 billion annually in payment processing costs, largely due to our reliance on external systems and correspondent banks. PAPSS eliminates these barriers by enabling instant, secure, local currency transactions across African nations.
PAPSS enables instant settlement between African countries in less than 120 seconds without routing payments through third-party currencies like the US dollar or euro.
If you look at trade among African countries, it hovers between 15 and 18%, which is the lowest among all of the continents. And for Africa to thrive, Africa needs to trade more with itself. Today, for example, it would be strange for someone going from Lagos to Ghana to first of all fly to New York before going to Ghana. So why should money travel that way? So the key message is that we needed to create a payment system that will be owned and controlled by Africans.
For Fidelity Bank customers, this partnership opens up huge possibilities. Their cross-border transactions between African countries can now start and end in local currencies.
For customers that are not bothering with how do I get FX to make payments for my goods and services, because that has been eliminated when you use PAPSS platform. So they pay in their local currency, and the recipient receives also in his own local currency. So for instance, you want to send money to somebody in Ghana. Here in Nigeria, your account will be debited in Naira, and the person in Ghana receives the money in cedis.
With this move, Fidelity Bank joins a growing list of African financial institutions, making AfTA's vision of seamless intra-Africa trade a reality.
And now to our first conversation. We see investor confidence as a lifeblood of any capital market, influencing liquidity, participation, and overall stability. In Nigeria, we see the market is navigating both local reforms and global headwinds. Sustaining that confidence requires a delicate balance of robust regulation, technological innovation, and effective collaboration among stakeholders, from post-trade efficiency to transparent processes. Market infrastructure providers like the Central Securities Clearing System, they play a pivotal role in safeguarding trust. With the Nigerian capital market preparing to transition to a shorter settlement cycle by November 28th, a move expected to reduce counterparty risk and align with global best practices. Let's talk to Babangida Yahaya, now the head Depository Services, Central Securities Clearing System. That's the CSCS PLC. Great to have you on the show. Good morning.
Good morning, Ladi. I hope you can hear me.
I can hear you loud and clear. It's great to have you. And, you know, definitely talking about investor confidence at this point, if you look at what the data is saying, you know, right now about Nigeria's equities market, we see the all-share index at, you know, an all-time high at this point, and it's up about 41.9% year to date. Market cap sitting at 92 trillion naira, and we're also seeing capital importation data showing where investors are putting money, you know, when it comes to the Nigerian economy. We see portfolio investments about $5.2 billion, money market instruments $4.2 billion. Bonds got 877 million in the first quarter of 2025. But we see equities there getting 117 million, smaller, you know, than the rest. So I'll pose it to you now. Talking about investor confidence in the equities market, what is this figures telling you? Seeing the equities there smaller, 117 million, but we see the all-share index at all-time highs. What are you seeing?
Hey, thank you very much, Ladi. I hope you can still hear me.
Yes, I can hear you loud and clear. You can carry on.
Yeah, so you rightly highlighted the performance of the capital market over the past couple of, within this period, as we've seen. The significance of the performance has been very, very impressive, obviously. And I think that that is largely, you know, driven by investor confidence in the market. We see that investors continue to come into the market to invest, you know, and obviously there are a couple of drivers for this investor confidence. I think one of which I will highlight is perhaps the macroeconomic stability. As you agree with me, investor sentiment, you know, is closely tied to the broader economic environment. So, for example, high inflation, things like volatile foreign exchange rates, and unpredictable interest rate movements can erode confidence, right? While on the other hand, you know, stability in these areas also foster long-term investment. So in Nigeria, for example, you can see the coordinated efforts of the federal government, and the central bank, and how it has become essential in ensuring that, it provides and ensuring stable macroeconomic indicators. Obviously, these policies, which are aimed at improving FX, be it FX liquidity or curbing inflation, are very key in building, and sustaining trust in the market. I think another area I would like to highlight is what we've seen around regulatory clarity and consistency, right? Again, you agree with me, clear, transparent, and consistent enforcement regulations reduce uncertainty for market participants. The Securities and Exchange Commission, SEC, in a collaboration with other market bodies, continue to strengthen market rules, continue to enhance disclosure requirements, and even continue to enforce compliance measures that safeguard investor interests. I think all of these things are critical. And let me also highlight, of course, the importance of strong corporate governance. Of course, good governance in listed companies continue to remain a decisive factor in attracting and retaining investors. And as you know, the NGX, as part of its recent rules, has a very strong corporate governance requirement, and all of these corporate governance principles ensure transparency, accountability, a fair treatment of shareholders. And I think all of these factors are very critical. You can't also take away the factor around, the market infrastructure. So having a very robust market infrastructure also brings a lot of investor confidence. An efficient, transparent, and secure post-trade environment is a cornerstone of every investor, confidence. The CSCS, and other market infrastructures, as you know, plays a very vital role in ensuring seamless clearing, settlement, and custody of securities. And the reliability of this infrastructure reduces operational risk, also increases transaction efficiency, and reassures investors that their assets are protected, and accurately accounted for. I think all of this dovetails into the performance that we can see, as you rightly highlighted today.
Still, looking at the data, at this point, $5.2 billion when it comes to portfolio investments. And we know we've had the argument that, okay, fine, FPI rising, not so bad. But, at the same time, it's been described as hot money. It's money that, comes in and, ultimately finds its way out, of the economy. So, in your opinion, at this point, we're in a bull market, right now. That's looking at the equities market, looking at where we are right now. It seems the all-share index is in price discovery. And I'm wondering, your platform, financial market infrastructure, and you cover post-trade activities. So I'm trying to imagine what happens in a bull market like we're seeing right now. Is that like more work for you guys? Is that more work for the CSCS, when there's a bull market?
No, Ladi?
I don't know if you can hear me, but I was asking you, since we're in a bull market right now, looking at where the NGX all-share index is, we're seeing really bullish sentiment in 2025, if you're starting looking at it from the year-to-date performance. So is it more work for you in a bull market? That's for the CSCS. I don't know if you can hear me.
Hello, Ladi. So I can hear you, but you keep breaking off.
Okay, I said, is it more work in a bull market for the CSCS, or like a bear market?
Okay. So yes, I did mention earlier that the post-trade entities play a very crucial role in what you see around the performance of the market today. The CSCS, as you know, is a CSD and a post-trade platform as well. I wouldn't say that it's more work. The CSD, which is CSS particularly, has been well positioned, ahead of these trends, that we can see today. The CSD, which is CSCS, has heavily invested, in in providing an efficient post-trade platform for the market, a huge investment around technology. As you know, technology has become a key driver of enabling businesses, and there's a lot of investment that the CSS has undertaken in this regard. And of course, even from the perspective of the people, the CSS has invested heavily in the human resources, and of course, in addition to some of the very crucial roles and collaborative partnerships that we've taken on, be it from within the domestic space or even internationally, to be able to share practices, to be able to share knowledge, and all of that. I think I would say that it's something that we've been well positioned and prepared for. I don't see it as much work or additional work. I think this is what we had always anticipated. This is what we're prepared for, and we're happy, about the trends. And we will continue to invest to ensure that, these trends are sustained, to the best of our capabilities within our own influence, space of influence within the market.
And do you think, we should be worried, seeing that portfolio investment is over 92% of capital imported into the country, trumping foreign direct investment? How are you seeing that?
No, absolutely. You've seen from the numbers you've shared that there's some sort of focus has been redirected to our market from the FPIs, the foreign portfolio investors. Obviously, it's a sign of good things happening in the market. The fundamentals are strong, and obviously from what we see, this trend, this trajectory is on a growing basis. And so to my own mind, from where I sit, I think that we'll continue to see more participation from this segment of the market. Fundamentals are right. The infrastructures are in place. The rules are robust. The regulators have the appropriate level of oversight, and all of this. And I think I keep saying the same thing. It just boils down to investor confidence, and we think that this trajectory will continue.
All right, so see, the Nigerian market is preparing for a transition to, a shorter settlement cycle. That's by November 28th. From a market readiness standpoint, what would you say are the key, operational and infrastructural investments, required? And what is CSCS doing, to achieve this? Because that means we're cutting off, 1 day delay when you make a trade, or maybe you're trying to buy or sell securities.
Yes, so you're right, and on that settlement cycle, let me start by commending, the effort of the Securities and Exchange Commission. I would say that we do have a forward-thinking Securities and Exchange Commission. Globally, if you look at what is happening globally, settlement cycles are shortening, right? And the Nigerian market is also not left behind. So the SEC has actually approved for the settlement cycle of the equities market to be shortened from the current T+3 to 2+2, no later than November 28th, 2025. And I will say to you that a team has been doing a lot of work over the past 1 to 2 years around reviewing this settlement cycle, and that team has also swung into implementation phase. It's a market focused team. The team is composed of various stakeholders from across the entire breadth of the market, including the regulator itself, the exchanges, the registrars, the brokerage community, the custodians, and a host of others. And I will assure you that in terms of implementation, there are critical enabling factors, success factors, and all of these factors have been considered by this team that is driving the implementation. So, for example, I'll say to you that one of the critical factors is to be able to put in place, system upgrades that will facilitate straight-through processing, right? With a shorter settlement cycle, it obviously demands seamless integration from the point of trade execution to final settlement. And CSS has been enhancing its technology, its platforms, and just to ensure that STP, is fulfilled, ensuring that trade flows automatically through that matching, clearing, and settlement without unnecessary delays. This is a very crucial factor, and in addition to that, let me also talk about process automation. The more you're able to remove manual interventions, the better you're able to seamlessly, transit to a shorter settlement cycle. So manual interventions, of course, are one of the biggest obstacles to meeting shorter settlement cycles. And by automating, key processes such as trade confirmations, reconciliations, payment instructions, you're able to achieve a more seamless integration. And of course, CSCS, again, and other market participants, are working at eliminating all of these bottlenecks, just in a bid to increase operational efficiency.
Right.
Another key aspect that, of course, let me just also mention is around the regulatory adjustments and alignment. With the transition to a shorter settlement cycle, obviously you expect some changes, around regulatory and payment frameworks, for example. And of course, CSS, again, is also working closely with the likes of the Securities and Exchange Commission, the Central Bank, just to ensure that from a legal compliance and liquidity perspective, all of these things are taken into account in a manner that supports, faster settlements.
Right, and definitely, I
think it's important, Ladi, to also emphasize the importance of market-wide simulation and testing, and this has been, factored into the implementation plan. There will be an extensive market-wide testing simulation, just to ensure that whatever could have gone wrong can be earlier detected, and addressed even ahead of the transitioning.
Right, simulations are definitely good, and we know, T+2 is great. We're looking forward to that, but I know the Oliver Twist and some investors now will be hoping for a T. That's instant settlement, at some point. I hope we get there soon. But thank you so much, Babangida Yahya, as a head, Depository Services, CSCS PLC. Thank you so much for coming on today.
Thank you very much, Lydia, and thanks for having me.
All right, so our next conversation in today's fast-evolving education and career landscape, we see the right opportunities can be life-changing, but access remains a challenge for many. Solutions Platforms Nigeria Limited, a rapidly growing edtech players, bridging this gap by connecting learners to tailored academic, professional, and travel opportunities, from personalized coaching by vetted experts to high success rates international study solutions. The company is reimagining how Nigerians learn, work, and explore the world. We'll be speaking with the founder and CEO, Joel Daniel, about their growth story and what makes their approach unique, and the vision driving their next chapter. And he's joining me right here in the studio. Great to have you. Good morning.
Thank you. Good morning. My name is Joel Daniel. Hi, viewers. Founder Solutions Platforms. I'm super happy to be here today.
Fantastic.
Thank you for having me.
Yes, good to have you. Yeah, so, definitely I did try to find out where we are, when it comes to EdTech in Nigeria. And I found out that the market size and growth, online education markets in Nigeria, that's projected to generate about $159.6 million US dollars, that's in revenue, by 2025. Internet penetration and device access, internet penetration will reach approximately 54.4% in early 2023. And we're seeing only 12.1% of Nigerians had access to consistent, high-quality internet. And we know EdTech relies heavily, on the internet. And we've also seen data consumption by Nigerians rising a lot. And I'm wondering, is it because of you guys in the EdTech space? But, talk to me so much about, talk to me about, what's playing out with your platform, at this time. Tell us about it. Walk us through what you guys, really do.
All right, thank you so much for this opportunity. Solutions Platform is an innovative company, and to mention, we are incorporated currently in England, United Kingdom, and in Nigeria. It's about solving problems, and there is a nagging problem currently itching badly that we need to fix. Just imagine you're 25 years of age, you're ready to learn, to advance your career, moving from the stage
Maybe
that you are now.
25, maybe.
You look 25, actually.
I look 25, yeah.
So Imagine you want to advance your career to the next phase, but you're faced with, getting access to the training you require to move you from the level you are to the next phase of your career, or, the getting access to the professionals that have the expertise to guide you and mentor you to the next phase of your career. Even so, another problem is the area of having that personalized kind of mentoring that you also deserve, because people are different. Learning, the teaching and learning, modes of teaching and learning is different. So you need that personalized, you need to be able to personalize the way you learn to advance the next career. So if you multiply that frustration of not getting access to the right people, the right medium to move you from the level you are to the next phase, multiply that frustration by the number of students, professionals, businesses across Africa, the number is humongous. And that is the problem Solutions Platform is trying to solve. We are solving the problem I personally term as CIA. C for cost of getting this training. The I is the individualized support you need as a person to move you from the level you are to the next phase. And the A there is having the access to the right mentors, to the right guidance that will move you to the next phase. And the market, like you mentioned, is huge. From our check, we discovered that the value of the market is worth 5 trillion GBP, that's pounds, is worth 5 trillion pounds. And in dollars, that's about $6.7 trillion dollars. So now, the good news is that we have launched three digital platforms that will help bridge and solve all these problems. And in a short while, I will be talking much about them.
Right.
And the good thing is, let me just quickly add this, that we are currently onboarding users because we have launched our MVPs of the solution, and people are onboarding users, and we're speaking with some investors who also see the vision and ready to tag along.
Right, and I know there are a couple of other, Edtech, platforms, at this time. Tell me about what, sets you apart, with and how your platform operates.
That's a good question. I can give you 3 reasons why SP digital platform is better. Now, one of it is the area of I see that as most of the platforms, the existing platforms right now, they tend to rely on third parties for their success. I'll share an insight in a short while. How do I mean? Platforms that currently existing, imagine they either offer a meetup solution, which is one thing that we have solved. They either offer that solution singly, but we have launched a convoluted and integrated solution whereby you can connect with mentors that will move you from the status you are to the next phase of your career as a career person, or as a student, you want to pass your exam, that will mentor you to pass, to have all the necessary guidance to move you to pass the exam you're preparing for. So we have that integrated solution to give that ease of access to the student, having to to access and get to the next phase. Right. That's one. We provide that integrated solution. Another thing is the area of time. Most of the meetup solution have not really mentioned those digital products. One is SP Hub that connects tutors to learners across board, regardless of their geographical location. Another one is Meetup. So imagine the existing solutions. What happens right now is that the cost of having the minimum cost you will subscribe for a month is about $8 or thereabout. But currently, we are offering this for free to Nigerians, to whoever who is interested in using it, is for free. Now, that's the area of cost. In terms of the time,
I know cost is a major barrier to getting extra education and all of that. So, I guess you're tackling affordability, at this point. But how affordable is it? Because you did say that part of your business is free. Right. What about other parts of it?
Right. So Okay, let me take a moment to now explain the digital product. The first one is the SP Hub. You connect mentors in IT, business, academics to learners who want to advance either as a business person, either as a professional, as a student willing to write an exam and to excel. So that's what SP Hub does. All right. So the next digital product we have also launched in the MVP, currently acquiring users, is the SP Connect. SP Connect is a meet app, just like we are in the age of virtual platform. People no longer report in their offices from the comfort of their homes. They jump into a calls and they have business meetings and whatnot. So that is the solutions we have put out there. Another one is events app. It's like SP Events, where you can schedule your event, feature event, get people to register, and then you're able to plan the logistics for such programs. So 3 integrated solutions for people to navigate and make their business and life better. So in terms of cost, we have also looked at the affordability and reason why we have put it out there for people to use. And we are quite aware of the current situation in the country, even in the world at large, not just Nigeria. And we are working out something that is affordable and will meet and be highly competitive with the existing competitors out there.
The average Nigerian is burdened with cost issues right now, and when you're having to navigate that and you're still trying to get an education, sometimes you say, you know what, maybe I should just eat instead of getting that education. But you're solving that. You're making it more affordable, at this point. So, talk to me about your vision, for the next 2 years in this space.
Yes, it's quite clear. Now, we set up. Currently, we have launched our MVP solutions, the SP Hub, SP Connect, and SP Events. So currently, between the first month and the first 5 months of our launch, because we have launched, obviously, we're acquiring users. So in the next 5 months, we are aggressive about getting people on that platform. Let people begin to explore, let people begin to use them. So in the next 12 months, after acquiring about minimum 5,000 users on board, in the next 12 months, that's like 17 months now, 12 plus the 5 months of acquiring users, 17 months into the project or post-launching, we will now try to claim the 1%. Like I mentioned, the market value is huge, all right? So we have looked at the serviceable obtainable market, which is about 30.8 million GBP, all right? So we intend to claim that 1% of the market within that 12 months.
And I'm guessing international, too.
International, yes.
You're going to be exporting education.
Obviously, what we're doing right now is give people access to connect with whoever trainer they want, and that's the platform we have built. You have expertise in anything you can sell to someone in South Africa, to someone in Ghana, to someone in Abuja, to someone in Calabar, you're in Lagos. The person gets your profile on our platform and they see that you have what it takes because they will be vetted. We are vetting everyone getting on that platform. So that way we are removing that barrier that will prevent Mr. A in Ghana or Mr. A in Calabar trying to reach Mr. B, who is a coder, who is a programmer in Lagos, Nigeria. So we're trying to remove that barrier, and that is what we are doing. Before now, it was more of international education that we were doing, making that grassroots impact. It is now to go global. It is now to make that global impact. So yes.
Right. All right. So I'm sure in solving problems, sometimes you run into challenges, at this point. Walk us through, what those challenges are, for you.
The major challenge, to be honest, is acquiring like minds partners. So what I mean, because we want people who are as passionate as ourselves, who believe in the dream of building a business that can outlive even the founder, it's been challenging. As a result, well, I say the growth has, was a bit static in a while. So, but right now, we have gotten like-minded people that we are working with who are willing to go with us all the way. So they want to come in as equity investors, so which was a major challenge before. We don't just want to bring in someone or a partner who will not see the vision, but who is just about making what you call the money, which is what they are all about. We want to build something that will outlive even the founder. It was a major challenge, but thankfully, we have gotten a partner. We are in talking terms about closing that deal and then be able to launch, even scale across Africa, which is a major game.
All right, congratulations on getting that partner, because getting the right partner for your business is very, very crucial. So how can interested learners, get to know about your platform and they're trying to join in?
Very good, very good. So I mentioned earlier that we are aggressive about onboarding users, all right? In fact, we have one program coming up on the 15th of August. Everyone coming there, they will be onboarding and they will get used to the interface. So to join the SP Hub, the website is www.solutionsplatforms.com. And then the Meet app that I told you, you can host all your virtual meetings. You can access that through meet.solutionsplatforms.com.
I'm sure they're going to put that up now. Yeah.
So, and the last one, if you want to create future events for anyone attending your event, to join, to be able to create events and manage how many people come in to make all the logistics possible, you can access that.
I see a QR code there. I guess they can just scan that too.
Yes, they can.
What does that take you to when you scan it?
So if it will take the person to where you can where to sign up. So you will either be signing up as a tutor or you'll be signing up as a student. As a tutor, if you want to make money, right? Because if you have an expertise, if you're a teacher, maybe you're a programmer, someone somewhere wants to engage you in your area of expertise, you get to set how much you take for that. So,
so there's a little gig economy growing in
That's it. So we are trying to also put the jobs out there for Nigerians and everyone else.
Fantastic. Yeah. I love, earning foreign currency, so maybe I'll give it a shot.
Please do.
At this point. Thank you so much. It was great to have you, Joel Daniel, the founder CEO of Solutions Platforms Nigeria Limited, an Edtech platform. Thank you for coming on today.
Thank you so much for the time, and thank you, Channel.
Fantastic. All right, so, from learning now, we're going to look at supply chain. We see Nigeria's economic environment is currently defined by exchange rate stability. If you look at the data at this point, the Naira has been stable most of the first half of 2025. You can look at it. You can put it up there. We see the performance there. It's up, as if you're looking at the black market, we're seeing a range there, 1.6 to about 1,570 naira. You can put that up. The official FX market, that's appreciated about 0.8% from 1,541 to about 1,529. So we're seeing stability in the first half of 2025. And that definitely that's great for business and supply chain and all of that, and people that are trying to do business in the country. So let's unpack how to navigate, what's playing out so far, because inflation is still an issue, at this point. And joining us to unpack this, we have Olusegun Sheton, as a co-founder, Vendor Credit, to tell us how to navigate most of the issues that are still with us, even though we've had Naira stability. Great to have you on the show, Sheye.
Great to be here, Ladi.
Yeah, I don't know if you're celebrating Naira stability, with me, so far, looking at the first half of 2025. How are the vendors doing?
Well, so the journey to here probably started in 2023 when the new government came on board and the appointment of the economic team. So you've seen what they had some issues that they made on ground. You had about $7 billion worth of forwards that Naira had been collected and funds had not been delivered. And off the bat, the CBN governor decided to tackle that immediately. So we have a situation where over the last, at least within 12 months, about 4.6 billion of that was cleared off. And that has an impact on investor sentiment as well, because nobody's going to be into somewhere that their money got stuck in the very first place. So we saw that happen. We saw them also take care of, inflation was on the rise. They had to increase MPR to where it is right now at 27.5%, just a bit to tighten liquidity, so you had less naira going after dollars. We also saw on the physical side, they made moves to ensure that a lot of investments went into ramping up production of oil, which is starting to pay off now. I think the last figure we saw was about 1.5, but if you add condensate, it comes to about 1.78 million barrels per day, which is what the average in the month of July. The security situation in the Niger Delta has eased out. There was a time when you couldn't go to Warri and be out of the house outside 6 p.m. But now you can club till 1, 2 a.m. in Warri. So there's been a lot of effort that has been put in from the government side. But we can also mention the fact that there are also external factors that come into play as well. So for instance, the dollar as a currency itself, right, between the beginning of the year and now has lost 11% in value. And that's because of the uncertainty around this tariff wars that the current president is executing. And he kind of plays into his own strategy as well, because he favors more of a devalued dollar in a bid to ensure that America is producing and exporting again. So, we've seen all those things come to play, right? And the reality is that all these factors, right, have sustained us to where we are right now. But businesses always have it at the back of my mind that, as long as structurally, Nigeria still has a situation where we're still heavily dependent on oil, which is a commodity. And like most commodities, a lot of factors can interplay to, swing what you're considering to be a positive into a negative. So by virtue of that, you have a situation where companies can't still afford to just relax, right? You still need to be thinking actively as to how to seize the opportunities that the stability presents as at now, right? While also hedging against the risk that, this stability could be short-lived or it could dissipate over time. So companies have to still look at how they can, take advantage of this while having a long-term view of ensuring that, they protect themselves against the downside that might materialize anytime in the future. So, what we are doing, so I was just going to add that what we're doing, is some of the things that we could always continue to suggest is, you need to buy hedging instruments like forwards. Companies have to look at how they can narrowise, if I can say that word, or if I can use that word, their costs, ensuring that, they're looking for ways in which they can partner with local suppliers to replace some of the items that they're having to import. We have worked with local vendors and suppliers to ensure that we deliver those services to companies that are highly import dependent. And then they also have to find some way to blend their costs. They need to seize, borrowing in dollars right now is single digits, at worst case scenario, maybe 10%, slightly low double digits. While borrowing in naira is, late 20s, early 30s in terms of exchange interest rates. So you need to figure out how you blend your costs such that, it kind of averages to maybe the early 20s or late teens in terms of interest rates and costs. And I think businesses also have to look lastly at how they need to earn foreign currency. There's nothing that stops you from serving markets that we have access to across the West African economic space as well. So those are some of the things that businesses can look at doing to take advantage of the stability we have right now, and also protect themselves against the downside of a future devaluation.
All right, definitely. We're hoping, stability continues and at some point it grows straight into, strengthening. That would be fantastic. But we know, supply chain optimization for resilience is very important. And, there's still that issue with, rising import costs. You did mention the tariffs. That's definitely going to impact those that are trying to import, at this time. What recommendations would you give, for those that are still, dependent on importing most of the raw materials that they need at this time? How do we narrowize all of those, needs for businesses right now? Make it be homegrown. What are you seeing there?
Okay, well, I think people kind of downplay the importance of supply chains. Supply chains have, for a lot of companies, especially in advanced countries, right, have turned supply chain to a competitive advantage, right? They use it as a tool or a weapon in this marketplace that they are competing for market share. And the goal shouldn't even be to be making your supply chain resilient. The goal should be you should make your supply chain anti-fragile. And by that I mean that you want a situation where your supply chain doesn't just withstand shocks and pressures, but matter of fact, it grows stronger under duress and in the midst of shocks and pressures. So, and some of the ways in which you can do that, like you rightly pointed out, is of course you need to localize. But for you to localize, you need to invest in research and development. Because, for instance, there's a company that I know that does beef rolls, for instance. And what they've done is they found alternatives. So instead of using beef, we know how expensive beef has been, and the fact that inflation has pretty much eroded purchasing power of their consumers. So they've had to find replacements, looking at things like tofu, which is soya beans, as an alternative. So if you're doing sugar, refined sugar, you need to start thinking about other alternatives as well. So whether it's, what do you call this stuff? Like alternatives to sugar, like brown sugar and a couple of other substitutes that you can use that are cheaper and are also locally available, but they are alternatives to refined sugar, to drive down your cost and ensure that your products you maintain the same quality, right? Or cornstarch for sugar as well. You maintain the same quality, but at a price point that is affordable in the market in which you are dealing with. And you can't do without digitizing your supply chains as well, because a lot of supply chains in Nigeria, especially for local companies or large local corporates in Nigeria, indigenous corporates, are still driven manually with paper and Excel sheets and spreadsheets. And there's a lot of data sitting in those silos. So digitization is a way to bring all that data together in one place and be able to analyze it. And if you're going to put in AI into your system, right, you need all that data centralized in a position where the AI can read through that data and ultimately be able to give you insights and guidance and direction on how you can move forward. And then for people that are doing imports, right, you start looking at partnering with local companies that you can outsource the importation of those items. You can partner with some of the vendors that we have to outsource the importation of those items, such that at the end of the day, your suppliers get paid in dollars, right? While you end up paying in Naira. So as long as any business that is looking ultimately at selling in Nigeria, if your revenues are in Naira, you need to figure out how your costs will be in Naira as well. So we avoid the situation which we saw over the last 2 years, where FX devaluation pretty much wiped off the equity of some very notable blue chip companies in Nigeria as well. So those are some of the suggestions that we believe that we are already implementing with some of our partner corporates, and we've seen it work for them. And we believe that if other guys adopt it as well, other corporates adopt it as well, it will also do them a wealth of good.
Right, and looking at all the results we're seeing coming in so far in 2025, we're no more seeing all those FX losses anymore, which is great. I guess, thank God for these companies at this point. But thank you so much. It was great having this conversation with you. Oluseyi Sheton is the co-founder at Vendor Credit. Thank you for coming on today.
Thank you very much, Fadi, for having me again.
Good morning, everyone. Welcome to the Global News segment of Business Morning. We're starting from Canada, where there's a risk that might affect your flights or your travel there. Air Canada's more than 10,000 flight attendants say that they will strike for 3 days beginning from Saturday after rejecting the sweetened offer from the airline and declining arbitration. Flight attendants have served a 72-hour strike notice after failing to reach a deal, their union said in a statement. Members voted 99.7% in favor of the strike mandate. With 130,000 passengers relying on that airline daily, the stakes are high for both travelers and the Canadian economy. The breakdown comes despite months of negotiations and a record compensation offer from the airline. Air Canada says it's been negotiating with CUPE, that's the association, for 8 months making progress on many issues without demanding any concessions. However, the airline claims that the union's latest counter-proposal included wage demands beyond previous offers, making agreement impossible. The company had proposed binding arbitration with an independent third party, a move it says would have ensured fairness while avoiding disruption. However, the CUPE rejected this, insisting on what Air Canada describes as unsustainable wage increases. And this rejection has left the airline considering all options, including a government-mandated resolution. And then in China, not a good one at all. Liquidators of China's Evergrande Group, they say that they have sold about $255 million of its assets months into China's largest debt liquidation process and taking control of more than 100 of the company's subsidiaries. They've received creditor claims totaling $45 billion, and the liquidators said that significantly higher than what they expected, the liabilities, which is at $27.5 billion. That happened in 2022 in the last disclosure. The liquidation of the world's most indebted property developer has proved challenging, as majority of Evergrande's units and assets are onshore, and many of them have already been seized by creditors. Given the scale and complexity of the company, Evergrande's liquidation could take more than a decade to be completed, according to offshore investors. While the pace of assets disposals for debt recovery was faster than market expectations, the value was still far below the creditors' claims. Shares of Evergrande, once China's top developer, which was listed in Hong Kong in 2009, are facing delisting and have been suspended from trading since January 29, 2024, the day the company received a liquidation order from the Hong Kong High Court. The liquidation order came after Evergrande failed to pay a viable restructuring plan for $23 billion offshore debt amidst a debt crisis in the company. A big one there that we're set to have conversations on in the coming days. In Russia, the economy is likely returning to growth. That's according to the numbers that we see from last quarter. The gross domestic product in annual terms expanded 1.5% in the second quarter, according to median estimate. And we wonder what perhaps the talks, I believe is on Friday, between Russian presidents and U.S. presidents would do to the economy in the coming days. Also in Germany, the wholesale prices went up 0.5%. Wholesale prices increases 0.5% in July compared to the same month last year. And the year-on-year growth in wholesale prices provides a measure of inflation at the wholesale level in Europe's largest economy. I believe that's the much I can take, Laddie. You owe me so much this week, Laddie. Right. And you'll pay for it.
So much.
I'm counting it for you.
So much playing out
for
the
midweek.
But definitely more time tomorrow. Thank you so much, Inide, for giving us the details of what's playing out in the global economy. And the peep into investing.com. Most active trades right now, that's on the NGX, Nigerian stock market. And we're still seeing insurance names there. Most active: Coronation Insurance, Mutual Benefits Assurance, Sovereign Trust Insurance PLC, ICO, and Japol Ventures. That's Business Morning today. Thank you so much for watching. Make that trade. I'm Laddie Williams. Bye for now.